Hey everyone, welcome back to Corporate Decoder, the place where we take complex financial filings and make them as simple as a lemonade stand. Today we're diving into AG Mortgage Investment Trust Inc.'s latest filing, and let's just say they've got some interesting moves on the chessboard. So buckle up because we're about to decode their August 1st report and see what the numbers are really telling us. Before we get too deep, if you love getting these clear financial breakdowns, don't forget to hit that subscribe button and join our Discord community linked below. It's a great place to chat about all things corporate finance. Alright, so what are we looking at here? This is a current report filed on August 1st explaining the financial goings-on for AG Mortgage Investment Trust Inc. Think of it like a company giving you a quarterly update on how it's doing. The big news here is that on August 1st, the company released its earnings for the quarter ending June 30th, 2025. They put out a press release and an earnings presentation, and these are the key documents we're dissecting to understand their financial health and performance. Now, AG Mortgage Investment Trust Inc. isn't just one thing. They have different types of stock, kind of like different classes of shares in a company. We're talking about their common stock, which is what most people think of when they hear company stock, but they also have preferred stock. This preferred stock comes in different flavors too, like Series A, Series B, and Series C. Each of these has different terms and conditions, but the key takeaway is that the company is managing various classes of ownership. Digging into the preferred stock, it's important to understand what cumulative and redeemable mean. Cumulative means if they miss a dividend payment, it gets added up and has to be paid later before common stockholders get anything. Redeemable means the company can buy back this stock at a certain price, the fixed interest rate, and then can change or float based on market conditions. This can be a way for companies to manage their interest rate risk. Now let's talk about debt. Companies don't just run on stock, they also borrow money. AG Mortgage Investment Trust Inc. has issued senior notes. Think of senior notes as loans that the company has taken out. The due 2029 tells us when they have to pay this money back. They have notes due in 29 tells us when they have to pay this money back. They have notes due in 2029 that pay a 9s due in 2029 that pay a 9.5% interest rate. This is a significant amount of debt, and understanding how they're managing it is crucial for their financial stability. They actually have two different series of these notes due in 2029, which is worth noting as they represent different borrowing arrangements. Looking at the company's listed securities, we can see the connection between these different types of stock and their trading symbols. Common stock is traded under MITT. Then we have the various preferred stocks like MITT PRE for Series A, MITT PRC for their Series C preferred stock. These symbols are like shorthand on the stock market, helping investors easily identify and trade these different securities on the New York Stock Exchange. The Series A cumulative redeemable preferred stock is a key part of their capital structure. It pays a dividend of 8.25%. This is a fixed cost for the company that needs to be paid. It's important to see how this dividend and others fits into their overall earnings. All these different stocks and notes are traded on the New York Stock Exchange, the NYSE. This is a major global exchange, and being listed here means the company meets certain standards for transparency and governance. It also means their securities are available to a wide range of investors. This is where we get to the heart of the matter, the actual results. On August 1st, AG Mortgage Investment Trust Inc. released their financial results for the quarter ending June 30th, 2025. This is the information that tells us if the company made money, how much it spent, and generally how it performed. The press release and the earnings presentation are the official documents they provided to share this information with investors and the public. The filing itself is formatted as a Form 8K, which is a report of current events that a listed company may have to file with the SEC. It's like a company's way of quickly informing the market about significant happenings. In this case, the important happenings are the results from the second quarter of 2025, which are detailed in Exhibits 99.1 and 99.2. These exhibits are essentially the company's official update on its financial performance. The company is specifically referencing Exhibit 99.1, which is the press release, and Exhibit 99.2. The earnings presentation, they are incorporating these documents by reference into this report. This means that everything publicly stated in those documents is now officially part of this filing. They're not giving us brand new information in the 8K itself, but rather pointing us to the detailed announcements they've already made. This section is all about the accompanying documents. It's like the table of contents for the extra materials that come with this report. They list out what's included to support the information they've just presented. Here's a breakdown of what's attached to this filing. You have Exhibit 99.1, which is the press release dated August 1st, 2025. This is typically a more formal announcement of their financial results. Then you have Exhibit 99.2, the earnings presentation for the fiscal quarter that ended on June 30, 2025. This is likely where you'll find graphs, charts, and key financial numbers presented in a more visual and digestible way for investors. This is often the most important part for understanding performance at a glance. Finally, there's Exhibit 104, the cover page interactive data file formatted as inline XBRL. This is a newer way for companies to present their financial data that makes it easier for computers to read and for investors to access and analyze the information. It's all about making financial data more machine readable and accessible. This section is the official sign-off. It's like the company's executive saying, yes, we are confirming that this information is accurate to the best of our knowledge. Here we see the sign-off from Jenny B. Neslin, who holds the title of General Counsel and Secretary. This signifies that the report has been properly reviewed and authorized by the appropriate legal and corporate officers of AG Mortgage Investment Trust, Inc. Now let's put on our investor hats and look at what this all means for AG Mortgage Investment Trust, Inc. The core of their business is mortgage investments, which means they make money by holding or trading mortgages. The key thing to watch is how they are performing in this environment. The fact that they're issuing preferred stock and senior notes tells us they are leveraging debt and equity to fund their investments. The dividend rates on their preferred stock, like that 8.25% on Series A, are fixed costs. If their mortgage investments aren't earning more than that, they're losing money on that specific funding structure. The 9.5% interest on their senior notes due in 29 is also a significant outflow. You have to ask, is the company generating enough interest income and capital appreciation from its mortgages to cover these costs and still make a profit for its common shareholders? The earnings release from August 1st is the most critical piece here. While this filing doesn't contain the specific numbers from that release directly, it points us to them. We'd be looking for things like net income, earnings per share, the yield on their mortgage portfolio, and how much their portfolio value has changed. A key number to watch would be the interest margin, is essentially the difference between the interest they earn on their mortgages and the interest they pay on their borrowings. If this margin is shrinking, it's a red flag. Another important metric is their book value per common share. This is like the company's net asset value on a per share basis. If this is going up, generally that's a good sign. If it's going down, it suggests the company's underlying assets are losing value. Given the company's name, AG Mortgage Investment Trust, Inc., we know they operate in the real estate and finance sectors, specifically focusing on mortgages. This industry is heavily influenced by interest rates. When interest rates rise, the value of existing low interest rate mortgages typically falls. Conversely, when rates fall, those existing mortgages become more valuable. This volatility is a significant risk factor. Looking at their structure with multiple classes of preferred stock and different series of notes, it suggests a strategy to access various forms of capital. However, managing all these different obligations and ensuring they are all profitable requires sophisticated financial management. For example, the Series C preferred stock's floating rate means their dividend costs could increase if interest rates go up, putting more pressure on their earnings. One area to scrutinize is the company's dividend policy on its common stock. As a REIT or real estate investment trust, they are generally required to distribute a significant portion of their taxable income to shareholders as dividends. So the sustainability of their common stock dividend is often a key indicator of their financial health. If they are forced to cut their dividend, it's usually a sign of underlying problems. Without the actual numbers from the August 1st press release and presentation, it's hard to give a definitive year-on-year comparison or draw deep conclusions about trends. However, the structure of this filing tells us that the company is focused on communicating its financial performance, particularly its results for the quarter ending June 30, 2025. The incorporation of Exhibits 99.1 and 99.2 means that anyone interested in the company's performance needs to look at those documents closely for the actual financial data. In terms of company direction, AG Mortgage Investment Trust, Inc. appears to be actively managing its capital structure with a mix of debt and equity, including various classes of preferred stock. The risks are heavily tied to the interest rate environment and the performance of the underlying mortgage market. Opportunities would lie in skillfully navigating these market conditions, perhaps by hedging against interest rate risk or strategically acquiring mortgages that offer attractive yields. The filing itself, by referencing the press release and earnings presentation, is really a gateway to the detailed financial story. It's like saying, we've released the full report and this is just the cover page announcement. So the real analysis would come from digging into those exhibits to see the actual operating results, balance sheet changes and cash flow statements. Alright, looking at AG Mortgage Investment Trust Inc., they're here clearly an active player in the mortgage investment space. Their strategy involves a complex mix of financing, as evidenced by their various preferred stock offerings and senior notes. The critical factor for their success will be their ability to generate consistent returns on their mortgage investments that comfortably outpace their borrowing costs and dividend payments. The interest rate environment remains their biggest challenge and opportunity. If rates move unfavorably, their profitability could be significantly impacted. What's your take on AG Mortgage Investment Trust Inc.'s financial strategy? Does their approach make sense in today's market? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more in-depth corporate financial analysis. And don't forget to join our Discord community. The link is in the description. It's a fantastic place to connect with fellow finance enthusiasts. Thanks for watching and we'll see you in the next Decode.